Hi, this is Justin Lake from Think Numbers, and today I'm going to actually explain to you everything about cash flow in a very simple and easy to understand way. So this is the process that you need to go through to actually understand cash flow, and it's all about coming up with a cash flow statement, but more importantly, let's understand conceptually what we're actually trying to do. So the first step that we're trying to do is we're actually trying to look at our actual cash position of what we actually begin with, how it actually moves throughout the period, and what it actually ends with. So what we actually begin with is our opening balance, and what ends up at the end of the period is our closing balance. So the whole purpose in an entire cash flow exercise is to understand this cash movement. Now it's made up of a number of steps. So let's go through step by step exactly what we need to do. So the first thing we need to do is, out of this cash movement, we need to understand what of our actual customers have paid us throughout the period. So what has actually been collected? And in order to do that, you can look at what cash sales have actually been received through our bank account, or you can look at the accounts receivable balance and actually work out how much cash has actually been collected off our invoices that we've invoiced to our customers. Next, we look at the actual supply balances, and we look through our accounts payable of what actual cash payments have we made out of our bank account to pay our suppliers. And a majority of the time, a lot of our big purchases are for things like inventory, any kind of expenses throughout the business, such as marketing expenses, electricity. And really, by looking through the accounts payable account, you can see what cash has actually been drawn out of the business. Next is our actual payroll, and what we've actually paid our employees and any contractors in our business. So we can actually look at what pay runs have been made and the cash that's physically gone out the bank account, and classify that according to cash paid to employees. And the first three of these actually form part of our operating cash flows. The next thing that you can do is you can look at the equipment that you've actually been bought or sold throughout the period. And so when looking at your bank account, you can see what cash has actually been received because you've sold some of your equipment, and anything that's been bought where you've actually laid money out to buy equipment. And this can include things like land, buildings, and any kind of physical property, plant, and equipment that's in your business. Then, in terms of intangibles, these are non-physical assets, so things like patents or rights or some kind of trademark, for example. And again, we can buy and sell these throughout the period, and it will actually have a physical transaction that will go through the bank account. And so you can classify this according to what has actually been bought, so any cash that's outlaid to buy an intangible asset, or anything that we've sold, such as a brand or a patent that we've sold to another party. Then there are the loans from any external banks or any other lenders, and you can take money out of the bank, so where you actually get a loan and you receive incoming cash, which is a positive cash flow into the bank, and also you can pay the principal back over the period of time, in which case that's cash going out of the bank account. We can also raise capital through equity, and this is the share capital account. So any share capital that you've actually raised, you receive the money throughout the period, and if we do have a share buyback or a shareholder sells out, we can actually then give the capital back to the shareholders, and that's an outflow of cash from the bank account. We can also have dividends. So dividends are payments that are made out of our retained earnings to our shareholders, and that's done on a periodic basis. And so this is purely an outgoing cash flow, but only when the dividend is actually paid. And just going back for a second, so the loans, the equity, and the dividends, this forms part of your financing activities, and the equipment and intangibles are part of your investing activities on your cash flow statement. Once you've worked out all of these individual movements, you can then actually balance it by taking an opening balance of your bank account. You can then look at all the individual movements, the positives, the negatives, the positive and negatives throughout all of these accounts. And then you can actually, if it balances by taking whatever the opening balance is plus the movement, it should equal your closing balance. If you've done that, you've been able to balance your cash flow statement. And that is actually understanding the entire journey of how your cash has been used throughout your business. So I hope you've enjoyed this quick explanation of how to understand cash flow. I will be going into some of my other videos about how to actually prepare a cash flow statement, but as an overview, so you get this conceptually, this is an overview summary of what cash flow is.